and thank you guys for calling the meeting to order here at 7:06. Before we head into executive session, the first item on our agenda is to hear, consider, and approve the minutes of the January 27th, 2021 meeting. Hopefully you've had a chance to look those minutes over. Why don't we take a moment or two, and if somebody would like to make a motion to approve the minutes when you're ready, please do so. Understand I can't see you, so perhaps Tom can step in and help on that front.
I'm happy to. Actually, I'll make the motion myself. Motion to approve.
Eric Caliper will second the motion.
Okay. All in favor?
Aye.
Yeah, aye.
Aye.
Any opposed?
I see none.
Abstain? Oh, abstain? Yep. There you go. And that passes. Next step, we're going to move into executive session for review of litigation. Chris and Dave will let you help us out here.
Great, thank you very much. Just for the benefit of the recording, we exited executive session at 7:32. No votes were taken. Brian, welcome. You are up next on the agenda. I do apologize. I am dealing with a little Wi-Fi issues. I'm on audio only. Tom McCarthy is kind of handling the video side for us.
No problem.
So with that, in the agenda, we're moving on to item number 4, which is the performance review, which is you, Brian, for pension and OPEB, please.
Okay. Should I go with trying to share the screen?
Oh, by all means.
Yeah, I think it'll be good.
Let's okay, waiting for that to come up.
Okay.
You got it, Tom?
I do.
Okay. Yeah, so I will, well, good evening, everyone. Good to be with you another month. I had, as far as the presentation is concerned, 2 topics. Just cover the performance, just a quick update through January for both the pension and the OPEB. And as I'm going through this, I wanted to update the committee on really 3 things, so you can keep me honest here. I want to let the committee know about some share class changes that positively impact the plan because it lowers the costs. I'll point those out as we go through. I wanted to give the committee an update on the OPEB rebalancing that we're taking place, which will happen tomorrow, but that was decided at the January meeting. So I'll touch on that when we get to the OPEB plan. And I will also touch on just Vanguard's rebalancing methodology. You know, it applies to both the pension and OPEB. Just how we view this, when we kind of rebalance and the reasoning behind that. So I have 1 slide in the presentation that I'll address on that. As always, I welcome your questions, your comments. So I'll try to pause if there's any questions as I'm going along. I'm on page 4, which I have up in the head. So for the month of January, whether it's U.S. stocks and bonds or international stocks and bonds, it was very muted returns. We hit all-time records here in February with Jay Powell presenting today, but for the month of January, you'll see U.S. stocks were down just nominally, down 0.3%. Non-U.S. international stocks eked out a small gain of 0.2%. And then we've seen rates slowly climbing up. And so that's been negatively impacting bonds. So U.S. bonds were down 0.8%, and non-U.S. bonds on a hedged basis, which are part of your portfolio, were not down as much, but still down 0.5%. So very muted across the board, very different from what we saw last year. I included the slide here on page 5 that just tracks the yield curve. The dark blue line is as of January. So you could still see from a year ago, we're still quite low as the Fed is holding rates At the short end, that's what they can control, close to zero. But longer term fixed income rates have been slowly moving up, really on the back of expected stimulus, and that would lead to higher inflation, thus higher rates. But the Fed is really clearly communicating they plan to be very accommodative for the foreseeable future. This is just a deeper look within the fixed income markets. I already talked about, treasuries were down, but even investment grade credit was down a little bit more than 1% as spreads were widening, or the yield over treasuries was widening just a little bit in January. That's since reversed, and investment grade credit spreads are really close to all-time tights. Not there yet, but close. So how does that equate to the plan performance? Given that our exposure broadly to the equity and fixed income markets, on a 1 month, basis, no surprise, we were down negative 0.37%, really as a result of the impacts that I just talked about in the equity and fixed income market. The bottom of the page, we're always looking at our asset allocation, the current asset allocations versus the policy targets, and we have the difference line. One thing I usually like to, well, first of all, we are close to all of those policy targets. And I'll bring that back up with respect to rebalancing. Part of that rebalancing, you see a cash. We keep the cash target really at zero because the portfolio is overwhelmingly liquid. We could raise cash within a day or so. And so the cash that you always see at the end of the month is cash that we raise at the end of the month in order for benefit payments. So for instance, in January, we had around 2.5 million go out in benefit payments. So we wait to the week before month end to raise that cash. But we also got a distribution from one of your private equity funds for about $500,000 from Mesero. So that really attributes to the cash balance of 3.5 million, but we see most of that go out the first of the month. And that cycle continues every month. On page 9 is just listing the performance of the funds, but across equity and fixed income. I think you're well aware now that we're following an index or a passive approach. So we're basically replicating the overall market. One of those topics I just talked about that I wanted to address the committee on is during the month of January, the total bond market index fund breached over 100 million. And the positive impact of that is that we go in, we're eligible, the town was eligible for a lower share class. So instead of being in the institutional, we are now in the institutional plus share class. What does that mean? Instead of paying 3.5 basis points, it went down to 3 basis points. And then, and we aggregate assets across both of your plans. So that will in the future benefit the OPEB plan as well. In the equity side, total international stock index was when you aggregate across the plans is now also over 100 million. So in the month of February, we converted this from the institutional to the institutional plus. What does that mean? It means that the basis points, the fee for that fund went from 8 basis points to 7 basis points. So small savings that, leaves more of the returns in the pocket of the pension plan. No information on the private equity or the real estate. We post 0 returns across the board because that's all on a quarterly lag. And I'll flip to page 12 if anyone's following on their own computer. So on page 12 is the OPEB plan, very similar, but it was the 1 month return was down 0.12%, slightly better than the pension plan because there's less fixed income in this portfolio. I was remiss to say in the pension plan, but fiscal year to date, very positive returns. You could see up over 18% for the OPEB plan. And to that point, very close to all of our policy targets. So this brings me to the second point that I wanted to update the committee on. If you recall, in the January meeting, we discussed replacing the PIMCO Global Bond Fund, and we would move into the same two fixed income funds that are found in the pension plan. So that transaction is going to happen tomorrow. We waited to the end of the month so we can have a clean or a full month of performance. We don't get any kind of tracking error in the middle of the month. And we've just been coordinating between PIMCO and People's Bank. And if Caitlin's on the line, I thank her for all her help with getting those signatures done. And the reason it's a process is because we are selling the PIMCO fund on the same day that we're buying the Vanguard funds, and that we do that so that there's the OPEB plan in this case is fully exposed to the market. We don't want to sell, wait till it settles, and then buy. So we place a buy on the same day as the sell, so the plan is always exposed to the market, and that requires some contracting between People's, PIMCO, and Vanguard. So thank you to Caitlin for her help on that. Brings me to page 14. I wanted to talk about and just give the committee, the investment board, insight. What's Vanguard's rebalancing methodology? You know, when do we do this? And certainly this was a big topic for investors in 2020 with all the volatility we saw, but we're still seeing rebalancing taking place here in 2021. So there's really three methodologies you can look at when rebalancing. You can look at a time only, like say, oh, we're just going to rebalance every quarter or every year, just a time only threshold. You could do a threshold only, which is like we're only going to rebalance if we get outside of plus or 5%. And then you could do a time end threshold measure, meaning we'll only rebalance if we're over 5% in an asset class, and it has to be over 5% at the end of the quarter. And so Vanguard has done a lot of analysis on this. I put links or titles to white papers that we've done on on rebalancing. And really what our research has shown is that there's no one optimal frequency or threshold for rebalancing, because the risk-adjusted returns don't differ meaningfully. However, just because they don't differ meaningfully doesn't mean we shouldn't have a policy in place. And part of that reason is to make sure it's part of the discipline process of, you know, not letting our emotions try to time, you know, what's going to happen in the market. So resist the temptation to time the market. But it also, the importance of the rebalancing is to keep the risk return profile very close to the strategic asset allocation targets that we spend a lot of time with you as a committee setting. So where does that leave us? You know, our methodology is to rebalance any time an asset class, equity, fixed income, or, you know, or in certain cases alternatives, gets to plus or minus 5% outside of that threshold. And we find that that threshold of plus or minus 5% hits that right balance of not having to rebalance frequently. If we were to set it less than that, we would have been rebalancing quite often in 2020. But anything more than plus or minus 5% starts to shift the risk return profile of the plan. So I wanted to give the retirement board that insight of those thresholds that we use, and to also give you that threshold that, you know, we can look at your asset allocation on a daily basis by looking into People's Bank. If we ever became the custodian, we track that on a daily basis, and we would get an alert as soon as that went over the plus or minus 5%. And this last bullet addresses using cash flows. So another way to manage to your targets is the cash flows. As I mentioned, we're paying out over, you know, $2 million usually on a monthly basis for distributions, and we're getting contributions either through the actual town on an annual basis or semi-annual basis, and then we're getting contributions some of the private equity funds. We use any of that cash flow to say where are we over or underweight, and that's how we make those decisions when those come into the plan. Any questions as I covered some of that?
Yeah, Brian, it's Carolyn. Can I ask a question just about that rebalancing and using the cash flow? I would
Yes.
assume that will hold, that using the cash flow should hold us, should work very nicely for the next several years, right? Even though the pension plan is closed to new participants, we're not at a point where we would have to take out of or redeem from the withdraw funds from the accounts, would we?
No, I mean, only in very big moves, such as, for example, not that it happened when Vanguard as the advisor last year, but last year when you saw that huge drawdown in the month of March, right, down 30%, that caused many pension plans to be below that 5% target. And so to plans' benefit, we then sold fixed income and purchased equities. And that provided that discipline, the classic, sell high, buy low. But in most cases, absent big swings in the market, cash flows are really a good way to keep to that target. Absolutely, Carolyn.
Good.
Okay. Again, even though I page forward, if you want me to go back anywhere, I'm glad to do so. I included a couple of slides, on our update on our outlook. Doesn't change a lot from month to month. Really just covered at a high level. Really so much of the economic outlook for 2021 is going to be dependent on, the virus, and as the first bullet says, really just the rollout of that vaccination. The good news, it's been so effective, and it's just a matter of how quickly that vaccine gets to others so we get to a herd immunity. But based on that, we see the rebound continuing, throughout the year, absent any major shocks. And right now, our target for GDP growth in the U.S. is still over 5% for 2021 as the economy recovers. The big question and the topic has been around inflation, given all this Fed stimulus that's been happening. And just our one-liner there is that we do see some inflation volatility, but it's because we're coming off of a very low base from a year ago. And so there could be, or we certainly expect at some point in 2021 for inflation to be over the 2% target, but that's not something structural. It's more of, again, that base effect. And therefore, we still see inflation in at least the short and the medium term being contained by the ongoing structural factors of globalization and demographics and technology. So, but I know that has some parts of the market, spooked, or just the worry about inflation. These are the asset class. We update these on a quarterly basis. Our projections as of December will be coming out in the beginning of March, and we could later in the year use those asset class projections to reevaluate any kind of asset allocation. And I was gonna pause there, Carolyn and committee, and move to the other topics, but I'm gonna stay online and address questions now or later.
Great. Does anyone have any questions for Brian?
Nope.
Okay.
All right. Thank you. All right, we will move on. Guys, just as a note, we had wanted, I had hoped to be able to do the, something that's missing from the agenda. I had hoped that we would be able to go through with our actuary, the OPEB actuarial analysis. But Hooker and Holcomb didn't have the complete analysis done. So we'll be doing that next month in March. So we are going to move forward now to item number 5, which is to review the IPS, the investment policy statement. According to our town code, we as a board are obliged to review our IPS twice a year. this board hasn't done it twice a year. We generally have kind of gotten to it once a year. I'd like to bring it back as a twice a year, particularly since we have Vanguard with us, and Brian just went through the rebalancing kind of thoughts that they have, the process around it. It is important that we really update the IPS, especially in light of the fact that we've moved over to the OCIO model with Vanguard. Chris provided in the handout for you something that I put together, an IPS draft change, which was kind of a table of numbers. And if I could call your attention to that, I want to apologize. I have a mathematical error in it that I want to point out, and that's in the upper right-hand corner that says proposed February 2021 IPS. Obviously, my ability to add was impaired that day. Total equity should read 45% as the minimum, not 55, and the target should be 55% and not 60. So if you could just note that, please.
Carolyn?
The idea here, yeah?
Oh, it's Brian. If it helps, I could share my screen and pull those documents up again, but I'll leave that up to you or the committee. I'll just offer that up.
That'd be great. Sorry I can't, guys. I've got really spotty Wi-Fi in this rental house.
Okay. Give me a moment and I will look for that document and I will pull that up.
Thank you. And it also includes kind of where we were as of December year end, our actual positions. So the idea here, guys, is we will not be taking a vote on this today. Instead, I would like to encourage some discussion around it. And then we will be voting on it next month. When we brought Vanguard on board as our OCIO, the framework we use, kind of the contract we have with them, sets targets for total equity, kind of total equity, fixed income, and real estate kind of asset buckets, not into the detailed sub-levels. So keep that in mind as Brian brings this up. I kind of put down, to make this easy for everybody, on the left-hand side of the page, you're going to see is what our December 2019 IPS looked like. And then the February 2021 has the yellow highlighting over it, just so you can see the changes. There's been a lot of changes in terms of how we allocate for the funds with coming on to Vanguard. Apart from changing.
Okay, good.
Okay. So a couple of the big changes. One, we tightened the minimum maximum band to a total of 10 percentage points, which is down from 20 percentage points. And so, for instance, the equity bucket, the equity allocation, which used to be a minimum of 40%, a maximum of 60%, would now be a minimum of 45% to a maximum of 65%. And that is in keeping with kind of the way that Vanguard likes to operate in general. Another change is that we're consolidating the emerging markets category into the non-US equity category. And that again keeps with how Vanguard manages the exposure for us. We've eliminated the categories hedge funds, multi-asset, and commodities. Those are things that we've taken votes on at this board, at this table over the past several months. And we reduced the cash target to 0% because, as Brian just mentioned, we are invested in really, really liquid funds. We don't seem to face that as a hurdle any longer. Brian, I'm not sure if maybe you want to weigh in a little bit about the thinking around targets, or someone else. I apologize, I can't see you on the video.
Sure. Yeah, we could take it, the backwards first. Like, with cash, we try to keep cash to a minimum because any cash you hold in the portfolio can act as a drag. So as long as we have no issue, and we don't with over 90% of the portfolio, or 90% of the portfolio being exposed to the public markets, which settle on T+1 or T+2, we have ample ability to meet any kind of benefit payments or distributions. So that's why we keep cash at a minimum to reduce any drag. And then as Carolyn pointed out, rightfully so, is, the big asset classes that we look at are equity, fixed income, and then in the alternatives, separately real estate and private equity. And as I just alluded to, is we keep that band at the asset class level of plus or minus 5%. So, anything as it starts to exceed that, again, we feel is starting to change the risk profile of the fund, right? I mean, I think everyone would agree a 60-40 versus the 70-30 is much different portfolio. So we look at that total asset class level and do a band of plus or minus 5%. Anything else you wanted me to hit, Carolyn? We still have the page up on the screen.
No, I think we can head over to OPEB if folks are kind of okay with this thinking. I mean, we'll come back to this next month. This is just food for thought for you. On the OPEB side, as we all know, we're more allocated toward, we're a little more on the risk spectrum, or more heavily weighted in equity over fixed income and real estate. We're doing kind of the same thing in keeping with Vanguard's methodology here to tighten the min-max band. We're breaking what was a category called global fixed income back in the December 19 IPS into two categories, U.S. and non-U.S. fixed income. And for OPEB, we're actually adding a cash category to keep that in line with how the pension would be presented. And that cash allocation is similar to pension. It would be 0% on the minimum and 2% on the maximum. And you can see that as of our December year-end numbers, we were right in line with that allocation based upon things that we had voted on in the past.
Yeah, that's right. You did see the cash spike at the end of the year in the OPEB, but that was because there was a contribution made at the end of the year, which we then got quickly invested into the market. And that was a town contribution.
I mean, does anyone feel strongly, or anyone feel strongly that allocation should be other than this, or we should look to allocate along different lines?
I think the tighter band is good. I like it.
And if we're going, also if we're going to be going to like what the charter says every 6 months, reviewing it in 6 months time, we say, okay, we want to get into a different asset class. We have time to do it. We have discussions. We know there's target dates. We could add stuff. So I think that's going to be a positive thing. Where you do it twice a year. It might not change, but years that might change, you have the options.
Yep, agree.
Does anybody ever question our allocation layout? Does anybody ever say does anybody from the town or the public ever look at this and have a question with it?
So it's a great question, right? This is our town document. This is posted to the website under the documents section of kind of the JRIB web page within the town website. I would say outside advisors look at it. Sometimes Pension and Investment Magazine will pick up any changes we make and publish that. I have to go before the Board of Finance every quarter on the RTM once a year, and we disclose what the allocation is. I'm not aware of anyone kind of pushing back on it. I've already presented this roughly to the Board of Finance in the quarterly update. Didn't get any pushback.
Okay, I just didn't know if you like consolidating the hedge funds and the multi-asset, into domestic equity. That I don't know. People say like, well, are you hiding that you're putting it in a different category so it doesn't look like we're? I don't know. Just you never know people's perception.
Yeah. No, that's a really good observation. In fact, we started when Brian and I were talking a little bit about this. one of my initial thoughts was to show all of those previous categories and put zeros next to them, right? To show that we are simply not allocating to them.
Right.
But Brian, correct me if I'm not mistaken. I think your thought that really doesn't speak to what an IPS is, which is a statement of where you are allocating toward.
Right. Yeah. And to reiterate that, yeah. So last year is when we exited those positions in the hedge funds and the commodities, so that those allocations are in fact zero. And therefore, it wasn't that we were trying to hide them by putting them in there. It's just those allocations do not exist any longer. As I believe Eric made the point, that doesn't mean we can't revisit it. It's not off the table. And we've certainly talked about private equity and private real estate. Do we increase those allocations? So we could absolutely revisit, but given that we don't have, or the plan specifically does not have any allocation at zero, for the time being, I think it made sense to not include it in the IPS.
Good.
I would say when in front of the RTM, I don't think you get any more granular than questions of what's the asset mix, differentiate between debt and equity. I think that's as deep as they go. Mm-hmm. And Eric, you can correct me if I'm wrong on that point, but that's my recollection.
Yeah, because we're in a fewer asset classes now. Now we've exited the commodities, the hedge funds. They're just going to see what the allocation is, and it's pretty. It's a very liquid portfolio, as you said. They're mostly in public equities. The only thing that might not be liquid would be the real estate and private equity, and that's a small position, overall.
Right.
Not everybody's retiring, and we're not paying out everything. We're not liquidating this thing anytime soon, so good position.
Yeah.
So if you would think on it, I'd like to kind of bring this back to you for a vote next month. And with the idea that you'll see this a lot more frequently going forward. You'll see this every 6 months, and we'll just take a quick look at it. We'll vote on it, and we'll make changes as we see necessary. The second part of the IPS, Chris included the PDF of the IPS itself for you with your packet. Is in the document. The document has a lot of language, and one of the areas that I wanted to call to your attention, and I wanted to propose some language change to, is regarding the voting of proxies. And Vanguard votes are proxies, right? And the wording of that is, effectively the investment managers shall review each proxy ballot and vote them in a manner that preserves and enhances long-term shareholder value. It's very boilerplate. Within the IPS that we currently have, 2 paragraphs down, is a statement on ESG considerations, which are environmental, social, and governance considerations. And one of the great opportunities we have to help exercise our ESG considerations in our investment portfolio is via our thoughts around proxy voting. Vanguard is already employing investment stewardship characteristics into their proxy voting, so these ESG considerations. What I'd like to do is pull a sentence up from the ESG paragraph and into the voting of proxies paragraph. And that would be the sentence here, which you saw, which I included, Chris included in your handout, is in red. And the addition would be, this shall include consideration of environmental, social, and governance issues, ESG, which are consistent with the board's fiduciary duties. And that sentence appears already 2 paragraphs down under ESG. So my goal is to kind of stress the point. I think it's really important that we as a pension fund do stress this point. And I'm happy that Vanguard is already employing it. I just think we could be a little more explicit with it. And very much welcome your thoughts on it. If anyone has any thoughts as to why we shouldn't do something like this, or if anyone wants to kind of comment of perhaps we should go further. But I'd like to present this for a vote for you next month as well.
If Chris, if both Vanguard, if this is already, it's already in the statement. I mean, is this belt and suspenders, and to what extent? What concerns I might have is to what extent it might limit Vanguard in investment decisions, or bringing proposals to us, rather, I should say.
Yeah, sure. Just because I'm sharing the screen, I couldn't see who asked the question, but so this is only with respect to the voting of the proxies. And so right now, we don't have any ESG specific funds within the portfolio. So the Vanguard funds that are part of the pension, the OPEB, are total stock or total bond market indices that hold just that, the whole market. So we're not employing any ESG funds or investments in the portfolio. So I'll separate that from how we think about, or how Vanguard thinks about, as our right to vote proxies, on behalf of our shareholders. And so given that we are a passive investor for these funds at least, and we have to hold the whole market, it's actually in our benefit, or our shareholders' benefit, to have or follow good corporate governance that improves the long-term returns of all of these companies. And so it's just alluded to down here. This is not in the IPS, and I'll be glad to dig into this topic more. But Vanguard thinks about 4 key principles when we vote proxies. And these are the 4: board composition, oversight of strategy and risk, executive compensation, and shareholder rights. So that topic of ESG kind of comes in under this banner of oversight of strategy and risk. And so we want to make sure that our companies that we are investing in are considerate of these topics of, in this, what we're using here is ESG. And so it's just guiding on how we vote, but it's not, in this case, have anything to do with how we're investing, if that makes sense.
So that would be limited to some extent of, for example, board members of a corporation, if they're looking for board of directors or something, and Vanguard would be voting as proxy on behalf of the town of Fairfield, that would influence their decision on who should compose that board, what we're saying.
Yes, and it's to be clear, yeah, it's not on specifically for the town of Fairfield. It's, let's just say, take that total stock market index. So we're voting on behalf of all investors into that total stock market index fund. And so yes, if a vote comes up to elect or to get rid of a certain director of a company, we'll think around, this is the framework that we'll think of and will influence on how we vote for a particular director. But again, it's on behalf of all shareholders of that fund, and not, we're not doing, it would be impossible to vote specifically for every investor. Yep.
So then how can we have that in our language if in reality you're not really, if you're voting for all of your shareholders and we're only a small portion of that, we can't say that that's what you're doing every time. Following our guidance, following our specific guidance.
I think that comment is fair. Yes. That's correct.
I mean, I'm not saying, I'm not saying one way or the other. I'm not, putting it on you. I'm just saying we can't say that because you're voting a lot of people's, and maybe a percentage of your shareholders have a similar verbiage, but some don't.
Right. So yeah, I'll separate the voting of the proxies from the investments. Like, a lot of endowments and foundations, I call them out because they're, that might be part of their mission as an institution. And they will go into ESG type of investments.
Right.
So a fund that would screen out, let's talk about screening out, oil and gas or, firearms. That would be a specific investment that, an endowment and foundation or even a public fund would choose to make. But as far as the voting of the proxies, yeah, I'm certainly not a lawyer to look at, what's right or not to be in the IPS. I'd say that we, as Carolyn was pointing out, we are considerate of ESG policies when voting proxies because we think those ESG characteristics apply to companies with respect to strategy and risk of the company. So hopefully that kind of answers it, but you're right in the sense that the votes are for all investors in that particular fund.
But to Chris's point, it's nice words to have, but from our perspective, it's not actionable.
Right.
I think it's
No,
important.
it's not.
Oh, this is Eric. I think
Sorry,
it's important. I think it's important that we're the top layer, even though we're a small layer at the top of where the making investments. The tone starts at the top, and it just sets the tone that Fairfield is again being cutting edge. We're taking things looking forward, and by having this in our policy, it's in there. It's going to be hard to take it out in the future. 20 years down the road, we might be in a different type of mix where we might be going more into, a direct investment. At that point, we're having this in there for a long time. We know, future boards will know, we're going to be looking at these things. It has more teeth in decisions down the road. We shouldn't keep kicking things down and say, oh, it's not important to us. We do it, the next time we'll do it, it just adds up and it sets a tone. And then future, OCIOs see, oh, here's their policy. We gotta think about this. This is what's important to this board, to this town, and so I think it's a good thing.
I'm not saying it's not important. I'm just saying, can we say something that might not be happening in reality? And I don't want to say that this is what we're saying is happening, and it might in fact not be to the letter of our wording here.
Yeah, Chris, it's Carolyn. You're right. I mean, it's actually the reason I pulled up the phone and I reached out to Brian, Vanguard, kind of proactively on this, and wanted to understand what Vanguard's already doing.
Right.
It's actually the passive investors, BlackRock and Vanguard, have gone to great lengths to incorporate these long-term governance best practice considerations, which are loosely kind of considered ESG considerations. Into their voting of proxies. But they can't unown a company they disagree with because they broadly own the market. Instead, they are coming in a way. This is to give support to Vanguard in something that they're doing already, and to signal to our town that we're very aware that these are important long-term best governance practices that we'd like to see incorporated in the proxies. So it's not something I think that Vanguard would be unable to do. To the contrary, I think it's something they're already doing and will probably do more of, but we're incorporating it and elevating it in our language.
Oh, okay. I mean, I'm just saying, I just don't know, I'm losing a little bit of the screen. I can't see the whole thing right here, but voting of the proxy ballot shall be for the exclusive benefit of the participants and beneficiaries of the funds. Therefore, the investment manager shall review each proxy ballot and vote them in a manner that preserves and enhances long-term shareholder value. Great. This shall include consideration of. So I guess if it's consideration, that's a very nebulous word. And again, I don't want to go too much into semantics. I just want to say that, I just never want to be accused of either giving lip service to it and just putting it in there just for the sake of it. And on the other side of the coin is that no one ever could say, well, look, Vanguard voted X way on this or against this board member, when they should have voted for this guy. And as Fairfield said, they shouldn't have done that. And then what do we do? Have to fire Vanguard? I mean, you know what I mean? I don't know. I just don't want to. I don't want to put Vanguard in a bad spot. I just don't want to, and I don't want to box us into a corner. I'm all for it in the sense of the spirit. I just don't know if it potentially, I don't know, opens up to us to criticism or other considerations.
Brian, you did some internal checking on that. Did you encounter any?
Well, so yeah, I could, maybe I'm going to speak on two sides. Like, so as far as, what we lay out or Vanguard lays out as far as how we think about risk, we do call out that we consider these ESG factors when thinking about voting and how we look at stewardship. I appreciate the point that's being made, and maybe the only way to really address it is in the language of the IPS is more from a legal opinion, because it is a legal document. And so I don't want to overstep my bounds of how the IPS should be written, given that there could be legal ramifications. But to Carolyn's point, and I'm glad to forward Vanguard's stewardship document to the entire board so that you see that those ESG are considerations when we're voting proxies. But I very much respect the point that's being made, and I don't have a great answer from the legal piece of it.
That's all. I mean,
Anyone else want to comment?
Yeah, Eric Caliper here. The only thing I would like to see, and I think where it really affects the portfolio as far as ESG is for international investment. How companies in China or India are taking effect. And there's been a lot of articles in the market right now in the media talking about ESG investing in China. And if Brian could come back maybe next time with a little bit on how the international part of the portfolio is looked at when it comes to ESG, that would be helpful.
Yeah, thanks, Eric. You're right, and the stewardship efforts of Vanguard's team have been certainly expanding. Started in the U.S., but now we have folks in Europe and in the Asia office. I want to say there's a Chinese office now as well. So Vanguard's stewardship team, this stewardship team is responsible for, again, the voting on how Vanguard votes on behalf of all of its investors through the funds. That team has only been growing. It's well over 30 people now. And that's just to digest all of that level of information out there. And of course, there's more international securities than US. So let me, I will put as my takeaway, I'm going to forward to the committee our stewardship document. It's a big document, but it's easy to skip to certain areas. And we produce an annual report, actually a semi-annual and an annual report that discloses like how we're voting. So, that could always be seen. So I just want to let the committee know that each year Vanguard publishes that semi-annual and annual report, but I'll also send you just a document that's talking about this stewardship because it's just grown in importance. Vanguard has been doing it for 15, 20, probably at least 20 years, but the prominence of this as a topic has only grown. Really, I think part of it is because of how big indexing has grown, right? And been embraced. And so Vanguard, BlackRock, big indexing companies now own 4, 5, 6%, of a company. You put that over to, and therefore we have an influence, and we recognize that as an important part of our fiduciary responsibility on behalf of investors, to be knowledgeable on these topics that are affecting all the companies that we, as been said, have kind of hold indefinitely, right? Because we're an index provider. So that just since we're on this topic, I'm not going to spend time on it, but of course, Vanguard has active funds. For our actively managed funds, those voting of proxies that right is given to the sub-advisors for those funds. So if we have an active equity fund and it's managed by Wellington or Lazard, we allow them to vote their own proxy because they're managing that fund. So I just wanted, we don't have the active management in this plan, but I just wanted to provide that distinction. Because sometimes it'll come out in the public, like, hey, how come Vanguard, this fund voted one way and the other Vanguard fund voted the other way? Well, you know, that right was given to that sub-advisor. But this is a great topic. It's an interesting one because of all the pieces that we've talked about. So more information to share with the committee.
Yep. Well, I welcome anyone, if you have any, if you know, you wake up tomorrow morning and you say, oh, I have a thought on this, you know, please, you know, send an email. Let's, you know, let me know. We'll bring this back to you. You'll receive the stewardship report, the annual report. You can see what Vanguard does do, and you know, I'll make sure to run this through our town attorney, just to see if he would anticipate that this would open up any challenges on the legal side. The goal here is to, you know, my goal in crafting this and pulling this language up is to elevate it in its importance as a signal to the town and to ourselves that long-term governance practices matter greatly. And we recognize Vanguard has influence, and you know, we are very supportive of proxy voting that advances the long-term best interests of companies, and that incorporates the ESG considerations.
Hey, Carol, this is Kevin. I have no problem with Brian or Vanguard or your opinion, but I do think a legal opinion might be helpful just to make sure you don't open up any exposure.
Will do. We can do it both. Brian, perhaps you can do this. Help me with on Vanguard's side, and I'll make sure to bring it in front of our town attorney.
Okay. Thank you, Carolyn.
Okay. As a takeaway.
And thanks,
All
Kevin.
All right. Thank you. Thank you, guys. So we'll be voting on those items next month. So if I could move the agenda forward here to item 6, it's the CFO report. Jared, I think you're on with us.
Yes, I am. This will be quick, and I want to say before I start a couple of things. One, I apologize for getting this to you all late. Just other things have taken away my time. And also, I think Eric Newman, I believe you sent me something after the last meeting that was a more, comprehensive model for, looking at and tracking each of our pension funds each month. And I just wanted to let you know, I wasn't blowing you off. I was just thinking that we're heading into this transition of going to another firm to do our payment of our pensions. So I want to wait until we get settled and we know what kind of information they can provide and maybe what kind of reporting they can provide. And then we can go from there and we can figure out more, because it would be great to have something like what you sent me and be able to present that to the board on a regular basis. So
Yep, thanks.
More to come on that. Yeah. And so I sent this to you all. I'm going to share this with everybody. This will just take a minute. Can you all see that?
Yes.
Okay. Okay. So, and Brian kind of alluded to this during his presentation, but and this is a pretty typical cycle. What happened in February? There were 2 pension payments that went out on actually the first of the month. They were just over $1 million each to fire and police and town, respectively. And then there was a transfer back into the funds, the sort of the umbrella fund, into the funds account, and then so that happened just after the distribution, the pension payments went out. And then, cut to most recently yesterday, as Brian had mentioned, that there was a, funding that gets shifted around to each of the individual pension funds, the fire and police in the town, to prepare us for the next distribution of the pension payments to the recipients. So that's about it. And like I said, I think in the future we can look forward to, maybe not the next meeting, but once we get settled with with whoever we end up going with to administer, make the pension payments, to see what kind of data and what kind of reporting they can provide us, and then maybe ways that we can tweak it a little bit to make it most productive for the board members. Any questions there?
So Jared, what's the status of our relationship with Peoples and them being our trustee, and when are we getting out of that? And don't we have a deadline coming up, or are we holding on? Will they stick with us until we can find someone new?
That's a great question. Carolyn, would you like me to go on to
Let's go right into it.
Yeah, good
Yes,
segue.
please. That's there. That's item 7 right there. Let's talk about that, please.
Okay, yeah, so there's 2 things. One is, and since you mentioned that first, we'll talk about that. So Peoples, they had kind of a soft deadline of March 31st to switch. And they had we talked about this last time, they had set up a partnership with a company called Penchecks to take over the pension payment process for them, for Peoples. And so we are in the process of finalizing that agreement with them, probably in the next day or 2. And then hopefully we can get all of our data to them regarding our pensioners soon enough so that they will get their first check from Penchecks from the new company on April 1st for their April 1st payment. And so that's the goal right now, and that's where it stands.
But Jared, the idea is that this is a temporary, right? The move to Penchecks
Yes.
is just, we're not signing a contract, a long-term contract. This is just to assure the continuation of the pension checks on time to the pensioners.
That's correct, and that's a good point. That this is a temporary fix, since we just recently found out that Peoples was making this move, and that we would continue looking at other companies as far as being the custodian or the company that's going to issue the checks themselves, as well as a trustee. And so that's something that we'll look at as a board to figure out if and how those things need to change.
Right.
I can go on unless there's questions about that. We will. And sure.
Jared, I want to just point out one more thing, and that's from Gerald, right? This is something that would come under, all likely would come under an RFP. I think we talked about that at the last meeting.
Oh, yes, ultimately. Yeah, not Penchecks, yep. not our relationship with Penchecks, but yes, then right. The successor to them would. Yeah, definitely.
Yep.
Yeah.
Okay.
Did they give any indication like why they suddenly are exiting, dropping us? I know they just announced they're being acquired. Did that have any influence on it? You know, that at the time they couldn't say, "Oh, we're about to be acquired." And, you know, they sent out all alerts saying your accounts. You know, well, everybody knows. So
I don't know exactly. It just wasn't a focus for them anymore. I think they started. They didn't have a ton of clients like us anymore, and so I think it became something where it wasn't. You know, it probably wasn't worth it for them to serve such a limited number of clients in that respect, and so they just got out of it altogether. That's my impression.
You want to go on to the actuary RFP?
Sure. Okay, so the latest on the actuary RFP is that we received the responses about and opened them, unsealed them 2 or 3 days ago. Gerald Foley did, and he was in the process of putting together a matrix as a means of comparing them, at least doing a high level comparison of certain aspects of the proposal. So that's where that stands, and there were 11 companies that responded, that submitted bids. We were delayed because there were about 93 questions that came back from the companies that were interested, and so it took a while to get them responses from us. And so if it seems like there's been a bit of a lag, that's one of the reasons. Anything else there? Carolyn, do you want to talk about the next steps there?
Yeah, so the next step, so we've got 11 actuarial firms responded. I'd really like for a subcommittee out of this board to come together to help Jared and the team on the town side kind of evaluate perhaps who some finalists might be that we could ultimately bring into the board to present to us, so that we as a board would be able to select one. I would very much like, if maybe three of you would like to kind of raise your hand and come forward to help kind of do this first level of comparative analysis and identify who we might bring before the board as a whole. And of course, I can't see you because I'm on the phone. So.
Any takers?
I'll be one of them. This is Eric Newman. I'll be one.
Thanks, Eric.
Thank you, Eric.
Well, sign me up, Jared. I'll help you out as well. It's Tom.
Thanks, Tom.
Thanks, Tom.
I'm just a girl who can't say no.
Carolyn, it's Kevin.
Of course,
happy to help out as well.
Thanks, Kevin. Okay.
That's great.
Thank you, guys. All right, and I think that the goal is that we would have the new actuary in place for the turn of the fiscal year, right? And we would just kick right off with kind of a July 1. So we'll be on a pretty accelerated timetable. The moss will not grow under our feet here. Jared, did you have anything else?
No, that was it.
Okay. All right, guys, moving on to item 8 here. That's new business. Anyone I don't have any new business. I think we've covered a lot. Does anyone have anything they'd like to put forward?
I don't know if this falls under new business. I'm a member of the Board of Education, and I don't know if Jared was involved or who was involved in the town side, but we all received new pension statements in the last month, and I would like to just give some praise to the town for producing those. They were very informative. They were a statement that we haven't seen ever before, and I would like to praise whoever was involved in the town side for producing that, and they should be commended, and hopefully that's something that we'll see that on a more regular basis, but they did a fantastic job.
Good, we'll pass that on. Appreciate
So
that.
if I can jump on that, I don't know about what happened on the Board of Ed side, but we used to receive the pension statements annually, and there was one glaring thing missing from the pension statement, is that previous pension statements would show what the employee contributed over the life of his term, and then the interest that was credited to that. Those numbers were missing from these pension statements. Although I do like the new format, I think it does give some clarity to the pensioner. I just feel that those are the two probably most important things in the pension statement that really needs to be documented. And I believe with the conversations that I had with HR previously is some of it's got to do with the record keeping of the town, because it goes back to pre-Munich's and some of the systems that they have to access to get some of that. So there may be some back room stuff that has to get repaired to get that to where it's got to be. And obviously, it looks like the pension statements were probably generated by Hooker and Holcomb, but yeah, that would be helpful if we can kind of capture that data in next year's pension statement. That would be helpful.
Agreed.
All right. If there is nothing else, look at us fly through this evening. If I might please ask for a motion to adjourn.
I will make that motion. This is Tom.
Yes.
Second.
We have a second. Great.
Second.
Terrific.
Jared.
All right. All in favor? Aye.
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 Thank you, gentlemen. Thank you, everyone.
Have a great
Thanks,
night.
thanks, Carolyn.
Thanks, Carolyn.
Take care.
Bye.
Night. Bye-bye. Bye.
Right, bye-bye.